Corp has reported record results for the year to date. Constant currency headline earnings per share for the 10 months to end April have shown growth of about 10%, building on a record comparative period. Commenting on the performance, CEO Bernard Berson says the results are pleasing and the company now looks to the future with quite confidence as it aspires to achieve continued real growth. Pepkor has bagged higher profits. At the halfway mark, the retailer has posted a 12.4% rise in headline earnings per share. The group says this was driven by a consistent retail performance, strategic execution in the fintech segment, and disciplined cost management. It also noted that its traditional retail operations showed strong trading momentum, so much so that it outperformed the market. The firms chalked that up to improved product availability, amongst other factors. Coronation Fund Managers has grown fund management earnings per share by 8% in the first half. That's despite heightened market volatility in the period. The firm uses fund management earnings to measure operating financial performance. That's as it excludes the net impact of fair value gains and losses and related foreign exchange movements on investment securities held for seeding products. Looking ahead, Coronation says while volatility and uncertainty are expected to continue, it's excited by the many opportunities that have presented themselves, and its globally integrated team is well positioned to take full advantage of these. Meanwhile, Reinet has also noted heightened market volatility and says in spite of this, it's managed to grow net asset value by 11.8%. That growth reflects the rise in value of Pension Corporation, the gain on the sale of British American Tobacco shares, and the dividends received from both these companies. A dividend of R7.52 has been proposed. That's a 5.7% increase on last year's payout. Datatec has increased its dividend payout policy to 50% of underlying earnings per share. This follows the release of the ICT Group's annual results. For the year to end February, headline earnings per share jumped 79.6%. That's thanks to a strong operating and financial performance across all the firm's regions and metrics. A dividend of R2 has been declared. That's a near 54% rise year on year. Solid. That's how Zeda has described its interim results. The owner of the Avis brand has posted an 11% rise in headline earnings per share. The group says its car rental and vehicle sales divisions faced mounting pressure during the period, but its leasing, subscription and Greater Africa strategies delivered, and that helped grow earnings. Shareholders will receive a payout of 55 cents per share, which is an increase of 10% on the previous payout. Stefanuti is back in the black. The construction group has reported annual headline earnings per share of 109 cents. That's from a loss of 55 cents previously. The turnaround comes as the firm's restructuring efforts start to bear fruit, but the company says more still needs to be done on that front. To that end, amongst other issues, the sale of SS Construcos needs to be concluded, and its claims on the Kusile power project need to be settled. Stefanuti expects its restructuring plans to run until June next year. Harmony Gold has taken further steps to increase its copper exposure and expand its global footprint. The miner will acquire Mac Copper. The firm is the sole owner of Australia's CSA copper mine, which is one of the country's highest grade copper mines. The deal carries a price tag of $1 billion, which is about 18 billion rand. Harmony plans to fund the purchase using a bridge facility, which will be underwritten by Citibank, JP Morgan and Macquarie, together with existing cash reserves. The transaction should be completed in the final quarter of this year. In international company news, Tesla's sales in Europe fell 49% in April from a year earlier. This even as battery electric sales rose by 27.8%, as the US EV maker's upgrade of its Model Y shows little sign of improving the brand. Here's more detail.
Tesla sales in Europe fell 49% in April from a year earlier, even as overall battery electric sales rose almost 28%. The US EV maker's upgrade of its Model Y is showing little sign of improving the brand's tarnished image in the region. Its sales dropped for a fourth month in a row, and its share of the total market nearly halved to 0.7% from 1.3% a year ago. The firm's flagging sales in Europe reflect a shift away from the brand. That's as Chinese competition strengthens and some protest against boss Elon Musk's political views. Total car sales in Europe remained roughly consistent with last year, falling just 0.3%. The strongest sales growth came from electric and plug-in hybrid cars. European car makers are trying to cut domestic costs and tackle competition amid US tariffs on auto parts, as well as a slowing economy. Uncertainty also continues to overshadow the industry's outlook, despite eased US-China trade tensions. April sales in the EU, Britain and European Free Trade Association fell to 1.07 million cars, following 2.8% growth a month before. In big movers, registrations at Chinese state-owned automaker SAIC Motor and Mitsubishi grew by over 24% and 22% respectively, while they fell 24.5% at Mazda.